but I think the sentiment is there. And so you're already seeing that massive shift in innovators coming back to America. I think you got almost reverse brain drain where you're
Right.
actually, bringing people to America now that want to build there, or at least more people are looking at how to build there, which is which is great. And I think when I
Hello, I'm Layne Hartsell with the Korea IT Times, and I'm here with Ali Madhavji of Blockchain Founders Fund, a top-tier startup investment. He's a knight on the highly anticipated TV show Crypto Nights, which looks like a lot of fun. And he's also a limited partner of Loyal VC and Draper Goren Home. He consults for organizations on emerging technologies such as InSeed, something out of Tokyo, out of Japan, and on the UN, United Nations. He is recognized as a blockchain 100 global leader, author of a number of books, acclaimed author, and many more things. Welcome, Ali. Nice to see you.
thank you, Lane, for having me and glad to be here.
Let me first ask you about gosh, this is such an exciting space. You all are doing such a lot of dynamic work. I want to ask you first about your background and how you got involved with blockchain.
Yeah, absolutely. I mean, I think one of the big things when you think about sort of the like how people get into this space, I think it's always an interesting story. And I think for me, when I think back, I think a lot of it culminated from my background, circumstances, how I grew up, that sort of led me into adopting this technology very early. And so my parents are both refugees from East Africa, so Kenya and Uganda, and came with just the clothes on their backs, right? And so at a very young age, I realized that you've just got to figure it out. Got to figure out how to make money. I grew up in a low income family. I had about a dozen small businesses on my own before, I was 18. And that included everything from a newspaper route, making $1.50 an hour at the start to, building and selling computers, solving computer viruses, helping people get TV shows and movies they want in the era of peer-to-peer content sharing. And from all of that, once I then went into university, I realized that university was this incredible pathway to jump social economic classes and had a lot of really, really incredible mentors as I was in university. And, you know, from sort of that plus, looking at the fact that, had a lot of distrust in government, didn't see government as necessarily always being useful, came through an environment where I had to kind of do everything on my own and like didn't get handouts or anything like that, looked in once I saw Bitcoin, I think it was very quickly something that aligned with me ideologically, right? From the standpoint of, hey, like this is something that governments can't manipulate. It gets away from government printing, which has been a disaster, and you end up triggering recessions, every 10 years or so from, massive, I'd say poor government like central bank governance. And then, from the fact that you don't want these things to fund wars and, kill kids and things like this. And so there was, I think, a very strong ideological alignment. I don't think any of us saw it becoming this today and where it's at today from like, say, a price perspective. But, it's incredible, I think, to see this type of instrument and this type of innovation where, as people are adopting it, as people even now might be adopting it for financial gains, it's really actually pushing this movement around basically creating a currency that's going to continue to gain and gain in power relative to national currencies. And it can't be manipulated, it can't be printed by governments. And I think that's still such an, exciting innovation, today and even for the future of money and the value currency, even in a world of, say, like AI and digitization.
I see the price this morning is 104,000 for Bitcoin. It's about 2 trillion market cap, somewhere around there. So it went from just pennies. You could buy a pizza or something. How much was it? 10,000 Bitcoin, something like that, to
Yeah.
$100,000. Um, in these days, there's venture capital funds like your fund, and there's Jim Cramer's talking about this in the news. Can you talk about what does the space look like? What is the state of this space right now?
Yeah, absolutely. So, I mean, the way I'd probably break it down is you've got sort of these blockchain innovations, and then you've got crypto where, you might have things that are, say, like launching tokens, et cetera, right? And, on the blockchain side, I think there's like a few sort of major things right now that are catching mainstream, right? So you've got the whole movement around RWAs or real world assets, which is essentially the tokenization of pretty much anything, but take securities, bonds, like all of these like different types of equities, et cetera, right? And that is a very interesting market. You're seeing a lot of talk around it. You're seeing even potentially new stock exchanges that are launched that are 24/7, that are fully tokenized. You're seeing this movement from everyone from Robinhood down, right? Like every major player is looking at it. Backed Finance, for example, just had a major announcement with Kraken on this. So a lot of really, really cool things happening on that front. Then you've got the whole movement around stable coins, right? And this, I think, has huge, huge implications in emerging markets, especially where, again, you've got central banks that probably haven't been doing their job as effectively as they should be. And so you've got currency instability, you've got potentially black markets, you've got other things that are happening where currency devaluations, et cetera, where it just becomes difficult to operate. And so you're seeing huge demand on stable coins in emerging markets. And that means that the stablecoin side is doing pretty well. Like you just saw Circle go public recently.
Right.
But then you've got everything downstream from stablecoins. So take payments, remittances, like anything that goes downstream from stablecoins is very interesting, very hot right now because those are then the actions that people are going to take with those stablecoins, right? So this has been very, very interesting, I think, as a segment. There's there's a lot of things happening across other areas of the blockchain space from like trade finance, et cetera. And then on the crypto front, you've got, of course, like huge, huge amounts of volumes, huge amount of trading. Still, I'd still say that um, tokens itself haven't maybe recovered from an altcoin perspective to what we might have seen in the past. And I think there's probably an oversaturation of new token launches, which is probably leading to a lack of being able to capture consumer interest in them and probably broken economics in many of them as well, right? So there's still some challenges on that front. But I'd say the industry itself is quite healthy. Companies are doing great, especially, where they're able to build real businesses and continue to grow off of that. Like we're seeing, great, great progress right now with companies over the last couple of years.
I think most people know what the DLT is or blockchain, or they've heard of it. But so there's some basics here. So Bitcoin is the big one, and then you talk about these altcoins like Ethereum or Solana. Can you just talk a little bit about that, just in case people don't quite understand the technology? And then I want to move into your investments and the exciting dynamic space of this thing.
Yeah, so in terms of like, Bitcoin, I think people would be familiar with for the most part. I think Ethereum sort of came in and sort of innovated around smart contracts, right? And that was sort of the big innovation that allowed other people to go build on it. You're allowed to basically create automated programmable contracts. The way I sort of look at this is it essentially solved the human trust issue. Like essentially when two parties want to do business but can't actually trust each other effectively, now you can basically solve that in an automated fashion. In fact, you don't even need to know who the other party is, right? And you can actually still transact safely. And that's actually a very incredible innovation that, unlocks a lot of human potential. It unlocks a lot of growth that, probably human to human business can't effectively do. And I don't think we've even come close to scratching the surface on this, right? Because if you think about this and what this innovation means, in the world of AI and machine to machine transactions and AI agents doing things on your behalf and working 24/7, et cetera, and having parameters of what they could spend or sort of what they could do, smart contracts are going to be at the core of this because it has to be instant. It has to be, immutable. It has to be, low fee. Like there is no infrastructure in the world other than in the Web3 space. And in reality, other than what was created by smart contracts that probably allow you to do that effectively. And so I think there's still huge, huge potential here where this continues to explode. And That's Ethereum, but that's also many of the other layer ones that sort of bring that smart contract capabilities. Take like Solana, Sui. I think there's a number of others that, fall into that category of probably being, let's call it staple altcoins. And those, many of them should be here for the very, very, very long term, right? I think as you go outside of that, then you've got a lot more tokens being launched that maybe don't have as fundamentally strong positions, haven't necessarily been around as long. That doesn't mean all of them are going to be gone, but many of them will. The vast majority probably won't survive the test of time. And they're very easy to launch. And so there's been a challenge around just millions and millions and millions of tokens launching. And there's going to be some great players in there. There's going to be companies that have great intentions that, make great progress that stand the test of time, but many of them won't, right? And these can be on all sorts of different things, across the industry, all sorts of ideas, etc.
So an L1 would be like the backbone, and then you guys talk about the Lego kind of effect. So you build
Yeah,
up.
so there's a few different things. So yeah, so correct. You could think about like the foundational layer, Lego layer, right? And then you think about like the application layer is going to be on top of that, right? And so what's actually being like built that people can use, because the average person is not going to be using the foundational layer. They're going to be using like the application layer, similar to say like using Facebook when you're on the internet or Instagram, like stuff like this. So that's the application layer. I think what's been missing in crypto oftentimes is what are these super apps? What are going to be those products where people don't even know they're using Web3 and it's the best product they've seen. It's the best experience they've seen. It has things that, otherwise you can't do, right? And that's going to be the big thing that we need to see in this cycle, I think, of what are those breakout companies that people don't realize what they're using, but it's Web3 and there's huge benefits compared to the alternative. And I think that's still missing. I think it's starting to come. I can give you a quick example. We've got a company called Roundtable that works with some of the, a lot of major brands. But for example, you can go onto the App Store right now and you can download, for example, the Miss World app. And Miss World has hundreds and hundreds of millions of people that follow it every year. And they just launched an app only a few weeks ago. You can go in the App Store and download it, and every like, every comment, every post is all Web3, right? But what's really cool about this now is this also means from an ad perspective, they're sovereign and can't get shut down. This means also from who owns the data, like the user owns the data. It's not Google, it's not X, it's not any of those other, companies that go own your data. This also means that that Miss World now can communicate with their users more effectively because they don't have to go through Google or X, right? So there's so many fundamental improvements that I think are part of this that are in reality needed, because I think the direction it's gone as well with sort of these major companies just dominating so much of the market share, and then you can see like they essentially have the ability to control your rights and freedoms in certain respects, right? They have the ability to choose the law or choose their own rules and build the law, right? In a lot of ways. And that's a problem. And so, you can go on, try Miss World, Miss Universe, sort of now. It's, that's a big deal. The hockey news just launched as well. So all 32 NHL teams on the hockey news, all that content is on chain, right? Every single post, every single like, every single comment. And then they just made an announcement with Paris Saint-Germain, the biggest sports club in the world, 500 million fans. They're going to be doing this too. And so I think there's a huge movement towards companies wanting to own their data, wanting to own their customer experience with their customer and not, how it's been under Google and X where they own everything. And I think that's going to be a fundamental shift in the world, and blockchain can power that solution, whereas you really couldn't do that solution without this type of technology.
Yeah, yeah. When you're for people that are listening, that this is actually DLT technology, the digital ledger technology, which is blockchain that Ali's talking about. And I think that for most people, they go. What I thought about as you were talking is people go to the pharmacy, right? They pick up their medicine, but there's a whole chain of trust steps that have to happen for that medicine to get there. It has to go through, customs, it has to do so forth. And what I hear you saying is that the DLT, Bitcoin being one example, but there's a whole lot of projects, things you're investing in that can make these steps trustworthy and distributed? Is that what is happening?
Well, yeah, exactly. And I think that sort of application layer
Okay.
is super critical, right? So as you think about, how do we go get 100 million people to go use a product and not know about all this sort of complex technology in the background, right? You don't need to understand that. You don't need to know that. You don't need to know the mechanics of all of how Facebook works and how Instagram works, right? You don't need to know all the tech. You don't need to know all the mechanics. And I think in Web3 today, a lot of the times that mechanics is impacting the user experience negatively, right? It's complicated. I mean, many people don't know that much about setting up wallets, setting up, and transacting across 10 different chains and then using a decentralized exchange and using a centralized
Right.
exchange
I
and
just
figuring out
want to
how
have an
on-ramp,
app that does
right?
it all, right?
Exactly, right? So this industry has been complicated and it's been challenging. And I think we're at a point now where tooling has also improved dramatically in the industry over the last few years, making it easier for developers, making experiences better from that perspective, which then allows, I think, the consumer stuff to start flowing out and actually making sure that we've got cleaner, better products that, you know, potentially have major advantages versus the traditional incumbents. And I think you're starting to see that in a cycle, but I think this is going to be the big story. It's got to be consumers in mass coming into this industry without knowing it.
Right. Like I said, I mean, let's say I'm a regular consumer. I just want to have an app that works, right? I want to be able to send money to, people, my family somewhere or whatever, or I want to be able to get the news. I want to be
Yeah.
choose what news sources I get, all of that kind of thing.
I mean, the money one's a really good example, right? Think about how complex this is even today, right? I mean, you can't really easily send money to every country in the world or all sorts of countries, right? It depends on like what countries. Like a lot of westernized countries are very easy to say send money to. As you're sending money outside of that, say you have a freelancer that you've hired, in Sub-Saharan Africa or in Latin America or, Middle East or Southeast Asia, like oftentimes it's still difficult to pay them. I hear that all the time, right? And there's so many different currencies, a lot of challenges. And when you can do it, you're paying super high fees oftentimes, depending on the country that's unjustified, right? And so, with blockchain technology, you can do this basically instantly. There's no lag time, there's no delay, and you can do it more cost effectively. And so this is, I think, a really great use case. And we're seeing this actually do extremely well right now.
And going a little bit deeper now, you mentioned RWAs, real world assets, and some other things. What you can effectively do with a real world asset is you could tokenize, say, like parts of a building, or as we were talking before the show, this expansion of liquidity. Can you talk more detailed about this thing?
Yeah, so I think there's huge potential around tokenization of products and securities. I mean, I was one of the original advisors to a company called Polymath, and we sort of
Sure.
I believe we coined the term security token maybe like eight years ago or so. So it's been a while. But I think the industry's come a long way. I think the idea behind tokenization has a couple of parts. I think one is, can you create liquidity in parts that were maybe like illiquid? So that's one part that you sort of mentioned. I think we got to be a little bit careful with this one. I think a lot more people get excited about certain aspects of this. Having said that, I mean, we're still in a world where money is relatively cheap. Um, and that means, say you've got a building for $100 million, is it easier for a private equity firm to buy it, or is it easier for you to find 4,000 buyers to buy a small chunk each? Like, it's probably easier for the pension plan or the private equity firm to buy it, right? So I think that one we got to be a little bit careful on. I think there are use cases, but I think it's still a little bit challenging on that one because REITs are still also fairly efficient, right? I think the challenge is, how do you increase access to these products effectively? Is tokenization also helps with? How do you create 24/7 trading markets or markets that become more effective, more efficient? How do you eliminate even like settlement times from T+1 or T+2 to zero and make like markets itself more efficient for settlement? Like, I think there's a lot of different areas here where tokenization and securitization make a lot of sense. And then when you think about standards, so like real estate tends to be like unstandard, right? Each building is different. You can't put them into a bucket all together very easily or as easily. I think where there's like interesting opportunities is take like debt markets, much bigger, like massive, massive debt markets, right? And the fact that it's standardizable, right? So take municipal bonds, take debt, like these are markets where probably tokenization and securitization make a lot of sense, and you can sell them in chunks more effectively. With a building, it's just each building is different. So then it becomes a little bit harder to do. I mean, you can obviously put them all together into a portfolio and do it, but still a little bit more complicated, I'd say. Um, but yeah, I think there's huge opportunities on tokenization and securitization of all sorts of products, and even increasing access to products that maybe were more difficult historically to get access to, et cetera. I think what we have to be careful with is making sure that we have the adequate controls and that consumers actually understand what they're investing in, et cetera, right? Because
Right.
if you try to sell someone a new product and they're not familiar with it, and it's, they're risking more than they should be risking, et cetera, then it starts to create some issues.
Yeah, I wanted to ask you about this because being a venture investor, you've got to really know the fine shades of how this works. And I did look up one coin. I think it's called Ondo. This is a RWA coin, but there's a lot of them coming along.
A lot.
And there was another one. Is Helium HNT? Is that a
Yeah, that's
RWA?
helium.
Okay, so that also it's for
That's more deep in. That's more like
a deep.
decentralized physical infrastructure. So yeah, a little bit different, but yeah.
Okay. Um, and it's also great to talk to people like you because I've done the academic work. I've seen the papers and how all this is coming about, and then I get a chance to talk to people that are actually doing the practical work and developers doing the coding. And it all comes together. It's a dynamic area, and I think that people really would do well to look into it. Um, Now, something really important has happened in 2025. There's been a 180-degree turn. So let's move from the technical to the political. A 180-degree turn in how the United States looks at this, which is extremely important, 22 or $23 trillion economy. Can you just talk a little bit about what's happened and then we can go into the wider world?
Yeah, I mean it's been fascinating, right? Because if you go back, 6 months ago, 7 months ago, 8 months ago, um, I would say sentiment on building in the US was very negative, right? Like 45% of our founders are in America, right? And we've got about 200 companies. And my conversations with founders are oftentimes founders asking me, how do I leave America? How do I go build somewhere else? How do I block off like American citizens from being able to buy our product or use our product? Similar with Canada, right? Like, how do you go basically block some of these markets where the regulatory landscape has not been favorable? And to me, this is sort of a sad thing because that just means that consumers are missing out on innovation. Like at the end of the day, the regulator's job shouldn't be to stifle innovation. It should be to make sure that innovation can thrive and grow while still maintaining some protections, right? Because that's, a big part of why regulators do a lot of what they exist, like why they exist, right? It's making sure you're protecting consumers. And there's a reason for some of this regulation. But I think we've got to a point where oftentimes it's so overblown. And so this shift in American policy has been phenomenal for founders, right? Because I've never seen a shift like this where every founder I'm talking to right now is talking about how do I go to America? How do I build in America? And how do I basically like start accessing and selling to Americans? And I think that is going to be great for an American innovation ship, right? And I hope that, and I think it's regardless of your policy or your political stance. I think this is more about how do you help drive innovation in the world. And I think other governments need to look at this and try to follow suit and say, how do we go help innovation thrive here and people build here? And that should be kind of the first and foremost principle that these regulators are following.
As an investor looking at this closely, of course, you've got a closer look on it. But from my perspective, looking at the academics, the papers, it looked like that it was really politicized in the last 4 years before now, whereas now it's opened up
I
The
wouldn't say
sandbox is,
I would actually not say that it was 4 years. I would actually say it's been longer than that in the US, right? So it's not a Democrat versus Republican policy. Like even in the first Trump Republican presidency, I wouldn't say it was pro crypto, right? And so I don't think this is like Republican versus Democrat. I think it's maybe the world shifted, the policies have shifted, whatnot, but in this period, I think it's been very positive. And I don't think it's fully caught up to what politicians are saying, right? So legislation from a state and federal level haven't caught up to a lot of the statements that are being made publicly. But I think the sentiment is there. And so you're already seeing that massive shift in innovators coming back to America. I think you got almost reverse brain drain where you're
right.
actually, bringing people to America now that want to build there, or at least more people are looking at how to build there, which is which is great. And I think when I'm based in Singapore now, our fund's based in Singapore. When you look at what Singapore and even I'd call say the United Arab Emirates, what they've done that's been so impressive over the last, let's call it decade almost, has been they've been places that had very clear regulation for the most part. They've basically set a set of rules. People have understood them. People have come there, and a lot of innovation has come out of that. And then they've made it like reasonably easy to even potentially bring high quality talent to those places, right? Especially the UAE, where it's probably among the best places in the world where you can bring incredible talent very, very easily and very quickly to the country. And so it allows you as a startup founder to build incredible innovation. Now, the US has a bit better of an advantage because it's got a lot more talent, right? And within the country than say some of the smaller countries. And so it's impressive though that the US is I'd say like somewhat leading on regulation around innovation right now. We'll see if it stays, but I think it's so far, I think everyone's pretty positive on the changes that are happening from an innovation perspective.
Yeah, it's an incredible turnaround. I mean, just like I said, I'm sitting here reading mostly. I'm not an actor in the space, but I'm reading, and all of a sudden, it's like the whole papers, the whole uh, literature shift. It's like a 180 degrees, and you can see it. Have you seen your investment profile, or what do you call it, portfolio, go up, or is there a lot of demand yet, or is that on the way, do you think, this
I
year?
mean, I mean, I mean, we're doing extremely well as a fund. I think what's been interesting for us, I mean, we've always differentiated from a lot of funds in the space in that like we invest in great founders early. And oftentimes it's not about like building a token or trying to sell the token. It's just how do you go build an incredible business that leverages blockchain technology to create a competitive advantage. And in the vast majority of cases, there's no discussions of a token. A token hasn't been planned. It hasn't been created. There might not even be other investors on the cap table. And
Mhm.
so we come in quite early into companies. And what's been really great is, we've got many companies now that have eight-figure plus revenue that we invested in when they had zero revenue, right? And that's a very, very good position to be in. And I think especially when you look at what's happening around stable coins, downstream from stable coins, we've got a number of businesses doing extremely, extremely well on that front. And so yeah, we're excited. I would say the growth has been just coming from great companies building things that people need and want relative to where I think a chunk of this industry has been trying to invest in, hey, what's the token for a quick buck? And I think that's backfired on a lot of people in the industry over the last few years.
Yeah, I wanted to ask you about this. You've been known, I've seen people write about you in the space, that you are very much into the substance, the fundamentals, and you criticize hype because you don't want to see just these coins just coming out every day that people, what are they called, memes, and they invest in them, and you're focused on building actual substance, things that could, well, go international. Uh, Go ahead. Yep.
I mean, I think the big thing, right? So when you're investing in a technology that has transformational impact, it's really about how do you create win-win-wins, right? And so that means like wins for consumers and society, wins for investors, wins for the team, right? And that means like everyone can win because you're building something in a space where there's so much innovation that like the entire thing can win, right? when you think about the alternative, oftentimes people are looking at like a closed pie, right? And they're like, hey, if I win, someone else needs to lose. And that is very dangerous. That's essentially what's happening in a lot of these tokens. That's what's happening in meme tokens. That's what's happening in even a lot of the token launches in general, right? Because they're structured in a way, their businesses aren't mature. They don't have, the actual growth and need for their product that like it ends up resulting in that win-lose mentality. And we just don't like that, right? We want to be part of investing in and supporting and helping transformational technology win, and that creates an opportunity for everyone to win.
Yeah, what you're talking about here, it sounds like network effect, right? So it's like this kind of virtuous, what do you call it, a virtuous loop that kind of just win, 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 as you say, which is great.
Absolutely. And I think a big part is you've got to have incredible technology paired with that network effect, right? Because I mean, a meme coin might have short-term network effect or short-term thoughts of network effect or false network effect, right? And it can be going up, but it's like fool's theory, right? And that's a dangerous game. And what ends up happening is consumers lose, right? And consumers get burnt and people have their hard-earned money in these things get burnt. And then they go home on Thanksgiving or on Christmas and they tell their family like, hey, don't do these things. And it really backfires on the industry, right? Because so it comes back to bite us. It comes back to make it a lot worse. I mean, look at what happened with FTX, Celsius, BlockFi.
Right,
And I feel like we started at a point where we started getting a lot of incredible adoption, right? I would be in New York and I'd talk to a taxi driver. He's like, hey, I'm using crypto.com. And you talk to the next taxi driver, the next person on the street, and they're, using a different product. And a lot of that has gotten hurt from that. And I don't even know if we fully recovered even from how much those disasters in crypto, and even though they weren't decentralized products, right? They were centralized products, BlockFi, Celsius, FTX, but people didn't necessarily know the difference. And so it hurt the industry as a whole, I think, and we're still recovering fully from it.
yeah. I mean, as a just as a personal comment, how does it feel when you're building, you know, dynamic businesses, you're looking at, as I said, substance, and then something like FTX comes along and they commit fraud. Is it fraud? I'm not sure the whole story, but then they totally sink the public sentiment in this dynamic field. I mean, it was about 2 years ago, right?
Yeah, so I mean, I think the challenge here, right, is there's always going to be people that try to take advantage of the system. There's always going to be a lack of, you know, controls oftentimes on some of these things. I think FTX one was a little bit surprising because they had relationships with US regulators, right? And that's challenging. I mean, we need an industry that's got transparency. Like we pride this industry on transparency and the fact that you can see everything on chain, and then you've got these centralized products where nothing is transparent. There's a lack of transparency. Like this is a problem, right? Like we need to move towards like full transparency. And I think that hyper decentralization will create trust and will create an alternative to the way that it currently works, right? Because we can have much more effective systems than traditional public companies. You think about what's on the NASDAQ or New York Stock Exchange and having to put out 10 Qs or 10 Ks every, 3 months or every year. Like we can have real-time reporting, fully real time, right? Like you can have things that are much more impressive in this industry. And if you think about the world and how it's adopting and how it's innovating in 100 years from now, 200 years from now, if we're still getting our information on a quarterly basis, like that's crazy, right? It's got to be real time. And so this is the technology that's going to, I think, allow us to push in that direction to get to real time information.
In the case of something like FTX, as I understand it, they were borrowing from their customers to support the business. But however this worked, can you guys build like a with a smart contract that can prevent this kind of dipping into the other?
So there's a number of solutions around this. I think that like one, there's auditability of or like proof of funds of exchanges and having transparency into that, which you've seen a movement on already to some extent. I think there's also the movement that I'm also very interested in is having essentially the ability for institutional, let's say custodians, et cetera, to hold assets, but you can trade it on exchanges. So that takes all the institutional capital out of being held by exchanges, which would be great. And then, I mean, decentralized exchanges already are decentralized. Like you don't need to give your custody to the exchange, right? Which in reality is much safer and much better for the consumer. It's just the user experience isn't as smooth. And I think that's going to change. And I think it's already starting to change. And so I can very much see a world in which people are using fully decentralized exchanges and they don't have that custodian risk. So they don't have the counterparty risk. They would have, other risks. There's hacking risks, things like that, which you'd still have other types of cybersecurity or hacking risk on a centralized exchange, right? So
Moving towards the end here, I don't want to take up all of your time, but this is fascinating. What is your view on, say, Africa, Southeast Asia, Vietnam, Singapore, Thailand, and then China? What do you see coming on? That's a big question. How about Asia? Let's go with Asia. What do you
yeah,
think?
but I mean, I'd probably break it out into emerging markets, right? So I think you've got Southeast Asia, Latin America, Africa, where you've got huge opportunity, right? For example, you got 1 billion people that don't have banking or identity. Like this is crazy. Like for us to be living in a world where we think our financial system's working because our own banking and financial system for us works and 1 billion people are cut out is disappointing. Like this is not okay, right? And we now have a system where in a decentralized world, you can have borrowing, lending, and savings products. We can completely leapfrog the existing banking system. Like, so to have a system where we're saying 1 billion people, it's okay to have cut out of the system because either they're not affluent enough, right? Or because of broad regulations around finance terrorists, like terrorism financing and AML, doesn't make sense because those 1 billion people aren't involved in that, right? So you can't cast a blanket across that large of a group to say we're trying to protect from the 0.001% of bad actors or whatever the number is, right? And I think this is a real problem in the way that legislation and regulation operates today. And this is going to unlock, I think, a lot of value, a lot of growth in the world that, I think there's tremendous opportunities. And then you take some of the instability we talked about, some of these currencies and these central banks with some of these currencies that, have been depreciating, and you look at now the ability to both choose a different currency. Like, why not think about transacting in some other currency that's more stable, right? And you're probably in a world in which that can change, right? Like you don't have to use your national currency in a digital world. And in reality, central banks can't stop it, right? Because it's just using the internet. And so that this is going to change, I think, very, very fast, where I think it even creates a control on central banks. Because if central banks are going to do what they've been doing for the last 100 years or the last 50 years or the last several generations, you can just switch now as the customer, as the citizen of the country. And I think that creates a very interesting control on the actions of central banks that didn't exist until, really today. So I think you've got a very, very exciting future around this technology, and it's something that's got to be embraced. I think some countries over the last few years have banned it. Some countries have looked at how to limit it. And at the end of the day, like you need to move into a world that, you know, uses innovation at its foundation, at its core, because again, where are we going in 100 years? And we need this type of technology to get there. And so it doesn't help to fight it. It makes more sense to embrace it and leverage it and use it as a competitive advantage to the country to help, your citizens have the best jobs, the best careers, capture more value from this equation, right?
As you were speaking, I remember there was a news report. I think it was the Financial Times. So yeah, a lot of people are concerned about say illicit flows of money, legitimate issue, right? There should be a lot of regulation. And then they point to, say, Bitcoin, which is an open ledger. You can follow it. At the same time, a ship owned by one of the big banks showed up in one of the ports in Europe loaded with drugs, all in US dollars, all done in US dollars. I mean, it's an entire ship. And so I think that as you were in the background there, this came up because I think the general public doesn't quite understand how regulation works and doesn't understand the role of the US dollar. And I think what you're trying to do, what I hear is not only trying to build some exciting companies, but trying to democratize money in a distributed manner. That's what I hear. So like what you just said. Is that correct?
Yeah, absolutely. I mean, if you were thinking about doing illicit transactions, you would never want to use Bitcoin or cryptocurrency that's transparent, has a transparent ledger, right? Like you can see every transaction forward and back,
Right.
right, on a distributed
And
ledger
for the
and
entire history
for
of
the
that.
entire history. Like you will get caught, right?
The
Because it's
FBI is going
there
to do that.
forever, right? So it's a terrible instrument to use for this, right? And maybe 10 years ago, because it was a newer technology and people weren't aware of how to like analyze some of the stuff, et cetera, it was used a bunch, right? But the US dollar, at the end of the day, your bank is looking one transaction forward and back typically, right? Sometimes one more step after that. But like it's a much better instrument, which is why it's the instrument of choice oftentimes when there's illicit transactions, right? Think about even arms financing or these other things, right? Like if you wanted to trace it, you could trace it, but there's oftentimes, I think, interests that don't want these things to be traced, right? And so that's why they're not using, Bitcoin.
Or just to close here, they say Bitcoin is like a kind of digital gold. It do you see that as like a settlements kind of currency, like for big accounts? Because I can't just use Bitcoin as like a cash, right? Like rough and ready.
It, I mean, you could. I don't think it's necessarily the best instrument, right? I think it depends. I think still for payments, it's still a little bit complicated. I mean, there's still innovations like Lightning, but I think it's still complicated from a day-to-day payments perspective. If you're trying to say go to the mall and use it, etc. Now, there are going to be credit cards and things, and so there are intermediary paths where you can load like Bitcoin or USDC, and you could use it off of a credit card, right? But that's now like a traditional centralized, way to do it.
I see.
Um, and
So one
from
moment,
it,
you would load a card with, or like a Visa card with the Bitcoin, and then you would borrow from it?
no, and then you could just spend it. I mean, a lot of people will
Okay,
borrow against their Bitcoin, but you could spend if you loaded it, but then that becomes centralized, right?
I
So you
see.
don't have to have custody to that until you withdraw it. And then, when you think about the digital gold sort of side, I think this is phenomenally better. Like, I don't think it's actually even a good comparison because Bitcoin is dramatically better than gold as a store of value. And the reason is because, and many readers or listeners are going to disagree with this, but the reason is because gold in reality is infinite. And so you've got a very large supply on Earth. You then have, you have a mined supply on Earth and you have an unmined supply on Earth. Then you've got basically an infinite supply in space,
I was gonna think,
right?
I was thinking that, yeah.
And, and so if you take, for example, a single asteroid, they calculated an estimated $9.8 billion, I believe, of gold per person on Earth, right? And that means that the price of gold mathematically is going to be capped by the cost of extraction plus a small margin because at some point in the future there's infinite amount of gold coming back to Earth. And so mathematically, if you were to do an equation on this, it caps the price of gold to whatever the cost of extraction is plus small margin. And Bitcoin doesn't have that cap because it doesn't have an infinite supply. And so I think it's an argument where gold has been a good store of value, but I think in the world of us and humanity getting to asteroid mining, which it already is, and continuing sort of space exploration, I think the argument around gold as a store of value decreases dramatically.
I've even thought that they could, even without mining it, they could just identify the asteroid with what's in it and then make
And sell
derivatives
it.
from that
Yeah,
gold.
exactly. I mean, think about
Don't
how
even need to mine it.
currently futures markets work or even derivatives markets work, right? I mean, we sell stuff in the ground all the time.
Right, right.
And you're exactly right. That's even more so a stronger argument than I probably had.
Yeah. That's a really good discussion in itself. Maybe we can get together sometime and look at that. You've got an exciting project that I think a lot of people would identify with, rather than all of this technical stuff we've been talking about in politics and that. But the Crypto Nights, you're having a lot of fun with this. Just talk a little bit about what that's like, getting together with the other, major, what do they call them, OGs in the blockchain.
Yeah, I mean, I think one of the big things, right, is this is an emerging technology. It is complicated. And so one of the big things that, comes out of Crypto Nights is how do we make this so that anyone can learn about crypto, anyone can learn about like blockchain technology in a fun way that's going to allow them to, learn, but actually get a lot of entertainment out of it. And I think you've seen this historically in the past with, certain types of shows. I think Shark Tank did it was like entrepreneurship started to become a bigger thing. And so this is a Shark Tank like show, but it's got its own spin, its own, flavor to it. And it's hosted by Adrian Grenier, if you remember him from Entourage, Vinny Chase. And it's got Kim Lee in the show from Bling Empire. And then we've got a number of, as you mentioned, OGs in the space like Brock Pierce, Kala Chasse, Magnus Grimeland, Nikita Sachdev. So we've got a lot of really great cast. And I think um, it's a really, really informative show to learn about the space, but also entertaining. And a big part is to go support entrepreneurs that are in the space to go make a difference, that want to build those win-win-wins, as we talked about. And, hopefully also for people to understand what maybe those win-win-wins aren't like and which companies maybe, are not doing things the right way. And so we try to, kind of highlight both sides of that coin.
Well, it looks like you're working all the time, having a lot of fun, and I hope to hear more. I've been speaking with Ali Madhavji, Blockchain Founders Fund. Talk to you later.
Thank you. My pleasure.